Well, hello, everyone. I wanted to welcome you to the Women Veterans Alliance, the Unconference Speaker Webinar Series. And just little housekeeping notes. Well, first of all, I'm Melissa Washington. I'm the founder and CEO of Women Veterans Alliance. Just a quick housekeeping, if you can just keep your phones on mute. You can show your video if you choose, picture, whichever you feel most comfortable with. We will be using the chat box. If you do have questions for our speaker, please feel free to go ahead and type those in, and she will definitely have time to respond to those questions. So with that, I wanted to share, if you're not familiar with our organization, if you're not connected with us on social media, we are on, as you can see, all the social media platforms. So please like us, be friends with us, connect with us. Also to subscribe to our YouTube channel. On YouTube, this will be available on YouTube, as well as our other webinars are available on our YouTube channel that you can watch. And if you're not a member of Women Veterans Alliance, you can find out more information about becoming a member at womenveteransalliance.org/join. And we are doing a giveaway. I know we're coming close. This is our third speaker that we've had this month. We are doing if you're interested in purchasing any items from our store, we are offering a 10% discount that you can use by next Monday. We do have items, jewelry, shirts, books, and books that are actually written by women veteran authors there that are available in the store. And if you haven't been on our last two webinars, the reason that we are doing this Unconference webinar speaker series, as we were supposed to have our, what would have been our 6th annual, our signature event, the Unconference, in October in Las Vegas this year. But unfortunately with the pandemic, we've rescheduled that to October of next year. But we don't want anybody to miss out on our fantastic speaker lineup that we had. So with that, that's why we have the speakers that are here. All right, so, and can everybody hear? I just got a pop-up that someone can't hear. Can you hear?
Yes.
Okay.
This is Teresa.
Okay, all right. Karen, may I want to check your audio? All right, so we're finishing up August already. This month went by quickly for me. I hope it did for all of you with everything that's going on. I just want this year to move along. But with that, I want to share what we have coming up for you in September. So as you can see, we have 5 fantastic speakers lined up, all different types of topics that we'll be discussing. And you can sign up, go to our webinars page on our website, and from there you can choose which ones you want to sign up and listen to, and feel free to sign up and listen to all of them. A lot of great information that will be shared there. So without further ado, because I don't want to take up any of her time, because that's what she is here to do, I want to introduce you to Kasey Ortiz, proud United States Marine Corps veteran, prestigious enrolled agent, author, and notary public. With over 25 years experience in the tax industry, she has helped businesses and individuals keep more money in their pocket with tax savings. I love it. And as you see, she is the tax tip diva. All right, it's all yours.
There we go. Am I unmuted now? Can you hear me? Okay, great. Hello, everybody out there in social media land. To all of my fellow female veterans and everyone else, thank you so much for having me. I want to reach out to Melissa and say thank you so much. This is an awesome opportunity, and I love that we were able to make this happen, even though we are living in this current crazy time. So I'm glad that we're able to do this, and I hope everybody learned something. I'm kind of old school, so I have paper, pen to take notes. I encourage everybody else to grab something to take some notes, because I guarantee you there'll be 1 or 2 things that I will talk about that I'm probably sure you haven't heard. So without further ado, I want to get started and say welcome to the hidden tax benefits of the stimulus package, the CARES Act. Now, let me be clear. This is the first stimulus that was passed. There has not been a second stimulus package, bill, law, or anything passed as of yet. So we are strictly talking about the CARES Act, which was the first stimulus package that was approved and implemented and sent out. And it has more than just the $1,200 or $2,400 benefit that everybody received. So we're going to go ahead and move on to our next slide. That's just a little about me. Like Melissa said, I am a proud Marine Corps veteran, and I got started in the tax industry actually because of my military service. After I had served faithfully for almost 6 years, I was required to take a medical discharge, and I received a lump sum of money. Just like everybody else, I went to one of those tax agencies, one of the big boys, H&R Block, Liberty, Jackson Hewitt, one of those. I gave them all my paperwork, and my lump sum of money was taxed. That following year, when I was trying to figure out what I was going to do after getting out, I took a basic tax class and found out that that lump sum of money should not have been taxed, that it was disability income. And so therefore, I did an amended tax return and I got my money back. And that started my trek into the tax industry. And here I am over 25 years later, helping individuals and businesses figure out and help them save more of what they've earned by using the tax code. So that's all about me. We're going to go ahead. So let's get into this information. I'm going to, excuse me, I'm going to cover some of the information that you might already know, but there's a couple of things that you don't. So first of all, the actual stimulus rebate amount that most people were eligible for or received was either $1,200 or $2,400 plus an additional $500 per dependent if they claimed a dependent on their tax return. So I got a lot of messages and people routinely asked me this question, and they said, and there was some miseducation going along out there, that this was, if you took the stimulus, that this was going to take away from your refund when you file your taxes for the next year. That is not true. This stimulus money that was received is considered a refundable credit. So it's a credit that you would be eligible for if you fell within certain guidelines. There are other refundable credits that are in the tax laws and in the tax rules that you may have heard of. So things like the earned income credit, the child tax credit, those credits, those type of credits are considered also refundable tax credits. Now, what is a refundable tax credit versus a non-refundable tax credit? The truth of the matter is the credit reduces your tax liability. So we're going to do a basic example. If after we've done your tax return and it says that the amount of tax you owe is, you know, $1,800, you owe $1,800 in taxes. So what would happen is the tax credit, in this case, if your tax credit was $1,200, the $1,200 would then reduce that $1,800 and make your tax liability only $600, if that makes sense. So you really do not have this as a owing situation. This is a credit that the government gives based upon certain factors. So we want to talk about what are those factors. So we have adjusted gross income factors and eligibility factors. The main thing that we want to talk about is the gross income, because not everybody qualifies based upon their gross income. So the adjusted gross income limit for this round and the eligibility requirements that was set forth, if you had income and you claimed single, the income limit was $75,000. That was the adjusted gross income limit. Married filing joint, your adjusted gross income limit was $150,000. Now, what is your adjusted gross income? Your adjusted gross income is the amount prior to your deductions, your standard deduction, your itemized deductions, or your tax liability. That is what your adjusted gross income is. So for an example, if you were married and you made $50,000 from your job and your husband made $50,000 from his job, then your total adjusted gross income is $100,000, and you are below the $150,000 threshold for the stimulus credit of $2,400 for married filing joint. I hope that makes sense. Okay. I also have, just so you know, I also have a PDF e-sheet that covers a lot of this basic information, covering the adjusted gross income amounts, the eligibility things, that I will send to Melissa. So if you're on the email list, you can get it. All right. There's an additional $500 that you can be eligible for per dependent that you claimed on your tax return. Meaning you would then be eligible for the $1,200 plus $500 for one dependent that you claim, giving your stimulus rebate to be $1,700. Or if you're married filing joint, $2,400 plus $500 for your dependent. They did max it out at 4 dependents. What the new rules may be, I'm being told that it may be 3 dependents. It may be reduced to 2 dependents. And what those dependent requirements are still in the air based upon this first round of stimulus payments. All right. Let's go to point 2, special use for the retirement funds. So a lot of times when you take out money from your retirement or you withdraw money from your retirement before you are age 59 and a half, there is a penalty tax on top of the withdrawal. Meaning if you withdrew $50,000, you're going to be taxed 10% additional penalty tax for that $50,000. Okay. But because of the coronavirus and the pandemic, the IRS and the rules included in the CARES Act have reduced that to 0. So there is no 10% penalty tax on any early withdrawal. Meaning if you are 59 58 or 57 or even 50, and you needed to withdraw money during this time from your retirement account for the coronavirus to help survive in your family, then you will not be penalized. Okay? Now, this isn't technically a new rule. This is a rule that's a revenue rule that's been on the books for a while, but it is usually, the penalty is normally waived during times of, we'll say, disaster crisis. So if there's tornadoes or hurricanes, or like what is coming now, we're in hurricane season, and there's 2 hurricanes coming off the coast of Texas, then this also kicks in during that time. But since we are in a world pandemic, they are making this rule available to everybody. Okay, let's see. And it does apply up to $100,000. So there is a 100K limit. Now, what I will say about this, while the CARES Act did have this language included in its implementation, as we have seen, the government has been updating rules as they go along. So it may change by the end of the year, but right now this is what the wording says. So they may increase that limit to 150,000, 200,000. It just depends. But right now, this is what the current wording says. All right. The other penalty that is commonly assessed or required is regarding the RMD. RMD is required minimum distribution. And what this is for people that have retirement accounts and they are required to take a distribution from it. They just have this money sitting in an account and they haven't withdrawn anything. There are rules regarding your required minimum distribution. And if you do not take money from your account by a certain age, in this case, 70 and a half to 72 is the major penalty, then you are penalized with an additional penalty. And right now, they are waiving that penalty as well if you make distributions or move things in 2020. All of these rules, all of these income limits, all of these credit requirements and non-refundable tax credit issues are based on the 2020 rules, because this is the year we are working in. So that means that these things will be applicable to your tax return that you will start filing in January. Okay, if that makes sense. Some of these rules will have a carryback period that may benefit your 2019 tax return, because they have rules that allow you to carry back losses if you have businesses or distributions that affect previously, but they have not issued guidance fully on those rules as yet. That would be covered in the business portion, where we talk about the PPP loans or SBA loans, things of that nature. I know that was a lot. I hope you guys took notes on that, because that was a lot. Please let me know if you have any questions. Put them in the chat box if anything seems confusing. and I will try and clear it up at the end. Moving on to our next slide. So what is exciting about the wording in this particular area of the CARES Act has to do with charitable deductions. So in the past and normally on your tax return, you could only take charitable contributions or deductions if you itemized your taxes. Meaning if you did the Schedule A and you made contributions to your church or other charitable organizations that were approved through the IRS, you could only get a tax benefit if you itemized. In this new CARES Act, it allows you up to $300 of cash charitable contributions to be taken off your adjusted gross income without itemizing. This is huge. This means that your adjusted gross income, your income before any deductions, before your standard deduction or anything, you can take $300 off immediately. And it will benefit you, therefore lowering your taxable income by that $300. So if you only made $1,000 overall adjusted gross income, you can reduce it by $300. And all of this will be implemented beginning for this tax year, for 2020. So when it comes time to file your taxes, make sure you have documented your charitable contributions up to $300 so that you can let your tax professional know and reduce your taxable income by that $300. It might not seem like much, but believe me, every dollar helps. Another charitable contribution change for the 2020 limit is it permits contributions during 2020 to private foundations, and it can be deducted up to the taxpayer's adjusted gross income only if you itemize. Whereas before it was only up to 50%. Now it can be reduced all the way up. That's more for higher net income individuals, but it is still a benefit that is included in this CARES Act stimulus. All of these things will be benefiting your current year tax return coming up. It seems like we've been in 2019 tax return mode all year long because of the pandemic, but these rules, these credits, all of these items will be effective for this year's tax return. So when it comes time to see your tax professional in January, February, March, make sure that you have this information and these rules. Next slide, please. So here's some important things that I want you to remember, even with all the information I just gave you, that these tax laws every year change. Nothing stays exactly the same. There's always some minor change that could affect you. So never go into your tax professional's office thinking, oh, it's the same as last year, because nothing is ever the same as last year. And with this pandemic, there are a lot of tax law changes that are going to be coming down the line. This second stimulus, the reason why they can't agree is because there's things in there that one party wants and the other party doesn't, but there are major tax implications to all of it. Another thing I want you to know is there's different types of tax credits. Like I talked about before, you have refundable and non-refundable tax credits. The difference between a refundable tax credit and a non-refundable tax credit is that once you get a refundable tax credit, if your refundable tax credit is worth $3,000 and your tax liability was only $1,500, it will then reduce all of your tax liability, and then the excess, the additional $1,500, would be refunded to you as part of your refund. So that's the difference between a refundable tax credit and a non-refundable tax credit. There are multiple other types of tax credits, but for purposes of this webinar, we're talking about those only because the stimulus is considered a refundable tax credit. Another thing you want to remember is that some tax benefits and credits expire. Because of the pandemic, I'm not sure how long they're going to say that this $1,200, the CARES Act payment, is good for. They might put a deadline on it saying that it's only good for 2020. They might extend it for 2021. It just depends. Right now, they have not issued the language. They have not put the expiration date on it. Otherwise, I would let you know. It's only good for 2020 tax return. If you have not filed your 2018 or your 2019 tax return, and you have not received this $1,200 stimulus or whatever it is for your filing status, then when you file your 2020 tax return, there will be questions that ask you if you received it, how much you received, and if you have not received it. And they are keeping track in the database to balance that out. So it's not like you'll get it twice. All right. Lastly, I want to let you know, review your tax return. If there's something on there that seems unclear to you, ask your tax professional to explain it. Because ultimately, even if your tax professional, let's just say, God forbid, something on there is incorrect, you technically are liable if the tax is your responsibility. So if they took a credit that they shouldn't have and said, oh, you don't owe any tax, but then only find out later that you do, unfortunately, you are responsible for the tax, not the tax professional. And that's the bad part. So always review your tax return for completeness and make sure that your information is correct on there. Okay? Next slide. So I've covered a lot of information in a short amount of time. I hope you guys took notes. I'm open for questions, and I'm going to turn it back over to Melissa.
Fantastic. This was great because it affects all of us with that. So if anybody has questions, since we do have a smaller group than anticipated, we can, if you don't want to type, go ahead and just unmute it. But if not, you want to type your questions. Also too, if you don't want to ask anything right now, there's contact information here.
I have a question.
There we go.
This is Teresa. Do you have to prove that the withdrawal, the early withdrawal from your IRA is COVID related? Because anybody can just say, well, I was affected. I mean, all of us were affected by COVID. But do you need to prove that in order to get the waiver?
So right now, the IRS does not require that you send in any type of documentation. What they have instructed is that withdrawals during a certain time frame may be covered. I can tell you that as a tax professional, I have a certain checklist of questions that I would ask my client, but it is not my job to analyze or review all of your documentation to make sure, because ultimately it is your responsibility. When and if the IRS issues guidance, they may request something from the taxpayer, meaning you, if that was an issue. They would ask for some type of documentation to prove it. But I really can't see how they would do that. What would they ask for? Proof of payment of all your bills, or proof that you had to buy groceries, or that you had to pay rent. I don't know what type of proof they would actually get or request, but right now there is no specific documentation that they've requested or required be attached to your tax return as of yet. Of course, here we are in August. We have until the end of December, early January before they could change their minds and issue some type of rules.
Thank you.
Oh.
That answers my question.
Good, good. I'm glad I could help. Any other questions?
Actually, I have another one. Where do
Okay.
you practice? What state?
So I am authorized to practice in all 50 states. My platform is actually online. So I am a virtual tax professional. I am an enrolled agent, so that means I am federally authorized in all 50 states. My base of operations is between Las Vegas and San Diego, California. But I travel all over for speaking, for all type of events and information. But I have several clients in multiple states that I do tax preparation for, as well as business consulting and business coaching.
So we can ask you state-related information too.
Yes, if I don't know it off the top of my head, please, my head only holds so much information, but if I don't know it off the top of my head, believe me, I will research it. I am very well versed in multiple states because of the fact that I dealt with a lot of military personnel in San Diego County before moving over to Las Vegas. And as we all know, we get transferred around to a lot of different states. So there's a lot of things that go on in multiple states. But if I don't know the answer right away, believe me, I can research it and get you an answer.
Thank you.
Great.
All right. Well, Kasey, I greatly appreciate your time, and everyone, just a reminder that this video will be up on our YouTube channel a little bit later. So if there had some questions or wanted to rewatch it, but feel free to reach out directly to Kasey. You've got her number, and we, as we know, and I think too, always the disclaimer, right? Especially things with the government, that everything's subject to change. So
That is the truth. And yes, you have my information, you have my email, my website. I am also on Facebook and Instagram as the Tax Tip Diva. So feel free to follow me there. I put a lot of good tax information out there, tax tips regularly, and updated information.
great. Thank you again.
Thank you guys so much. I appreciate you having me.